All right, let's jump right in. We're going to crack open the first chapter of Trading Options for Dummies and really demystify what it takes to get started in the world of options.
Yeah, a lot of us do, right? You hear the word options and immediately your mind jumps to these chaotic trading floors or charts that look like rocket science. But honestly, that's a huge misconception, and we're going to tear it down right now.
And this is really the secret sauce, isn't it? The book makes it super clear. Pretty much anyone can use options, but, and this is a big but, it's going to take a fundamental mental shift. It's not about being some kind of math wizard. It's really about learning to see the entire market through a brand new lens.
Okay, so let's get into that rewiring process. The very first thing you've got to wrap your head around is that an option isn't just, a stock on sale. It's a totally different beast, a completely different kind of financial tool. I mean, think about this for a second. What if you could actually profit from a stock's moves, whether it shoots up or tanks, without ever having to buy the stock itself? This is the core idea that makes options so unique. And that's the key difference right there. See, with stocks, you're all about ownership. You buy it, you own it. But with options, it's all about controlling the rights. The right to buy or the right to sell that stock at a price you've already agreed on for a specific amount of time. It's a total shift from a game of collecting assets to a game of pure strategy. So, this big shift from ownership to rights, that's the mental rewiring we keep talking about. You're basically flipping a switch in your brain. You're going from being that patient, long-term investor to a much more precise, shorter-term trader. So let's break that down. Over here, you've got your classic investor, right? They're playing the long game, thinking in years, maybe even decades. It's all about being patient, finding great companies, and just letting time do its thing. But then you look over here at the options trader. Their whole world is different. The timeline, it's way shorter. We're talking weeks, days, sometimes even minutes. Their approach has to be surgical, incredibly precise, and locked in on very specific market moves. Okay, so if it's not about owning stuff, what is it about? Well, it all boils down to the contract. And every single options contract has two very distinct sides to it. And what's so important here is that these aren't just some handshake deals. A listed stock option is a standardized, formal contract. The terms are the same for everyone. And, this is huge, it's all guaranteed by something called the Option Clearing Corporation, or the OCC. That basically means there's a trusted third party in the middle, so you never have to worry if the person on the other side of your trade is going to flake on you. And every single trade has these two roles. It's like a seesaw. On one side, you have the buyer. When you buy an option, you're buying rights, the right to do something, like buy a stock at a certain price. On the other side, you have the seller. When you sell an option, you're taking on an obligation. You're promising to do something if the buyer decides to exercise their right. Getting this buyer versus seller, rights versus obligations dynamic down, it's everything. It's absolutely fundamental.
All right, now this is where things get really interesting. Let's talk about one of the most powerful and maybe most famous aspects of options: leverage. So let's paint a picture. Say there's a stock trading at $50 a share, and you want to get in on the action with 100 shares. Well, to buy them the old-fashioned way, you'd have to pony up $5,000. That is a serious amount of cash to tie up in one position.
But now, look at the difference with an option. To control the exact same 100 shares and get the same profit potential from their movement, you might only need to spend, say, $500. I mean, think about that. You're controlling the same potential for a fraction of the cost, a tenth in this case. And this is a super important point a lot of people miss. Leverage isn't just about trying to make huge risky bets. It can actually be a risk management tool. Because you're putting less of your own money on the line to enter the trade, your maximum possible loss is capped at that smaller amount. It's way less than if you had bought all those shares outright. Now, because these tools are so powerful and, let's face it, so precise, you can't just floor it without a map. The book is really clear on this. You've got to do a personal checkup and build a rock-solid trading plan before you even think about risking a single penny. And we're not talking about some vague goal you have in your head. A real plan is like a business plan for your trading. It's a checklist. What's your setup like? How much time can you actually commit? Where are you going to get your news and data? How will you actually place your trades? And maybe most importantly, how are you going to keep learning? This thing is your blueprint. And this quote from the book just nails why that plan is so critical. Let's be honest, trading brings out some powerful emotions in all of us, mostly fear and greed. They can totally hijack your decision-making. That plan, that's your anchor. It's the set of rules you made when you were calm and logical, so you can stick to them when the market gets crazy and your emotions are screaming at you.
So when you boil it all down, this first chapter is really just setting the stage. It's about accepting that you need to rewire your brain, you need to truly understand the tools you're using, and you have to prepare like a pro. That trading plan we talked about, that's your map for this whole new world. So the only question left is, are you ready to pick up the pen and start drawing?